Hello, this is Graham Bibby, Chief Investment Officer. I have an update for you on the recent banking failures and run-on banks and further contagion risks and the implication for markets. I've got some key dates here that I'll refer to, and these are important because they give a sense of the speed at which things have happened. On March the 8th, Silvergate Bank failed. They were connected to crypto exchanges and crypto funds. On March the 10th, Silicon Valley Bank failed. On March the 12th, Signature Bank failed. March the 20th, Credit Suisse was bought out by UBS. And on March the 22nd, not a bank, but the Federal Reserve raised their cash rates 25 basis points to 5%. There's been a lot of volatility in markets and a lot of concern about future contagion. So what does this all mean? Let's explore each one in turn and what the implications will be for markets and our portfolios. So Silvergate Bank failed partly because US regulators were clamping down on connections to cryptocurrency exchanges, and as such, deposits into that bank were disrupted, and as a consequence, they failed. Not related to that was Silicon Valley Bank, which is the premier banker to venture capitalists and startups in California, centered around San Francisco. And Signature Bank failed, which they were the banker to high net worth corporates, many of those large funds, and individuals as well. What was different with all of these was that they weren't small depositors, they were large depositors. And the US has a entity called the Federal Deposit Insurance Corporation, or FDIC, that guarantees deposits backed by the US government up to $250,000 US. But because there were many of those deposits well above that, when money started to be pulled out, they were pulled out because of concern about uninsured deposits above that. There's many reasons for why each individual bank failed, and we've got write-ups on some of that are in our notes to clients that you'll see. But I want to focus on the recent Credit Suisse failure as well, which was really because they were at a weak point because of poor management decisions over a number of years. And they had a recent issue with financial reporting, and their largest shareholder refused to tip more money into an equity raising that they proposed. That snowballed and their share price collapsed, and they were encouraged over the weekend by the Swiss National Bank, which is their central bank, to be bought out by UBS, and that happened this last weekend. On the 22nd of March, we had the US Fed then hike rates by 25 basis points to 5%. The implications of that is that the Federal Reserve is still resolved to solve inflation and crush inflation despite these runs on banks. What it means is that there's been progress made by regulators on supporting the banking system, and indeed some of the larger banks have benefited, such as JP Morgan have led a consortium of banks to support some of the other weaker small and mid-sized banks. That includes First Republic Bank, which is still in a perilous position. Its share price has fallen. They have large deposits as well. So, what are the implications for markets? Well, it's still likely that a more solid backstopping will happen, and that the Federal Reserve and Treasury will further act to backstop depositors and restore confidence to the system. We expect more to be done and this to be more fully resolved. The movement of the Fed to not stop with their rate hikes has continued, and yet we think that they will most likely, this will be their last hike, or there may be one more, but they're committed to, on the one hand, control inflation and still be on that path, but on the other hand, try and keep the banking contagion contained. And we think that they're likely to be successful and combined with the US Treasury. The issues for portfolios is that we've seen lots of volatility. We have been underweight equities and conservatively positioned, and we expect to be conservatively positioned while this event is running through a resolution. but we see that the situation should improve despite an expected downturn in the economies going forward. So with that, I'll refer you to the notes that we've had on both of these events from Silicon Valley Bank and Credit Suisse, and we'll have an update for the quarter that will come out in the middle of April for you as well. Thanks very much, and any questions, please come back to us or your advisor. Thank you.